First of all, your reaction to how Asia is dealing with the European sell-off.
Yeah, morning. I think, the Asian markets were sold down yesterday, and I think what's going on today is obviously there's really no good news basically out there, and what we're seeing is continued cautious sentiment. I think, there is some occasional buying that comes in, which is probably what's providing it with a little bit of support this morning.
We've had Citigroup downgrading their 2011 global forecast overnight to 3.1% from 3.7%. ISM figures out from the States tonight. China's inflation on Friday. I mean, I know that you are quite cautious and you're advising your clients to stay defensive, but what's your thoughts on the global growth? It just gets worse and worse by each news day.
Yeah, I mean, I think, well, without a doubt, growth is going to be sluggish, and it's going to probably be sluggish for the next couple of years as well, given what's going on in the U.S. and Eurozone. I mean, at this stage, we're talking about sub 2% growth for those two countries. We're not quite in the recession camp yet, but obviously we know that the risks are high of that happening. However, I think that, it'll be probably a more shallow and shorter recession than what we saw during the financial crisis, and that's going to allow global growth to stay positive.
And also, you don't expect Asian governments to spend their way out of this slowdown because of the inflation concern. We've got inflation out, Lorraine, on Friday from China. You think inflation's now peaked for the summer at 6.5%?
We do, yeah. We do expect inflation to be peaking for the most part in Asia, but there's still, I think food prices are still quite stubbornly high, and that's the thing to watch for. I mean, it's going to be weather-related issues for the food sector as well. But I think on the whole, I think China's still wary of, excess bubbles here and there, and that's what that's probably what's going to partly drive their monetary policy for the time being. I will say, however, we're pretty much expecting things to either be on hold or to start relaxing a bit in the region.
Interesting, Lorraine, that August was the first month for a year that China's central bank has not raised rates or raised the reserve requirement ratio.
Yeah, well, reserve requirement ratios are already very high. I mean, I think it's at an all-time high. So I think what they're doing is going to be much more targeted, and we've seen it recently. They're probably looking at more focused ways to shore up bank capital. I think they are concerned that there has been excess, or rather more relaxed, lending policies, particularly for some of the provincial banks. I think the large banks are still okay.
I've been asking a lot of guests this past few days, indeed, about the impact on which countries in Asia really feel the heat from the US and European slowdown. They were pointing to Korea as the most fragile. Would you agree with that?
I think the open economies are fragile. I mean, in places where, like Korea or Taiwan, where a lot of exports are electronic or consumer goods related, and therefore the big markets tend to be the U.S. or Europe. It is particularly fragile. However, I would say that I think on a valuation side, Korea is not exceptionally expensive, and I think that's going to provide some support to it. And the companies have actually been able to at least hold on to market share or gain some market share in this recent months as well, particularly away from the Japanese companies, I would say.
Final question for you, Lorraine. Where do you see the real opportunity for growth in Asia as regards advising clients on equity research?
Yeah, we're still, given what's going on with the global headwinds and with weakness in the U.S. and Europe, we're actually, you're going to have to favor the domestic economies. And you're still looking at countries like particularly China, Indonesia, even some of the other ASEAN countries where there's much more of a domestic story. I think for India, there's even some opportunities there, but obviously there's wariness because interest rates have been very high, and there could be some weaknesses in the financial system there. But on the whole, we would focus on these few countries where the domestic story, consumer staples, selected banks, I think still look quite interesting.